listening to Inside Real Estate, where we go deep into the minds of real estate professionals. Here are your hosts, Paul and Sal.
And Brad Weisgerber. How are you, sir?
Good, how are you?
So Brad just keeps showing up.
Here I am.
The show originally was just supposed to be Paul and Sal. It's become Paul, Sal, and Brad.
Someone's got to babysit you.
Yeah.
Guys.
What's up, everyone? Paul Paslakis here. We've got Mr. Kevin Keck on the show. How are you, sir?
Doing pretty good.
Yeah, Kevin Keck, so everybody knows, is an appraiser. He also has a real estate license. So. He dabbles in a lot of things. Great hair, for those of you that can see on Facebook Live. I mean, that thing is a great poof up there, man. It's beautiful. Yeah. Do you blow dry that?
It's all air dry.
Air dried. Okay, good. That's good to know. So today we'll talk a little bit about, obviously, appraisals. We'll talk a little bit about, what's going on in the market. Is the housing market overheating, guys? I think we should start talking about that. Tariffs, how could that potentially affect our market? I think that's, could be like something that happens. Also, there's an article that talks about more Americans are quitting their jobs and what possibly that means, which is interesting.
I quit,
And
Paul.
then there's
that right now.
What's that?
You just quit right now?
You're going to quit?
Yeah.
I quit, Paul.
You don't have a job.
That's true.
Yeah, you just do.
You must do things,
Yeah.
I guess.
So let's start with Kevin. We'll get to those topics here in a minute. But Kevin, tell us a little bit about your background. I mean, how did you get? You do a lot of appraisals, dude.
I do a lot of
How many appraisals a month do you do?
Usually on an average month, I'd be say between about 80 to 100.
I don't even know how that's possible. Whoa.
Whoa.
I was not expecting that number. That's a lot.
That's an overt reaction. Yeah, that's a lot of appraisals.
I was thinking 50 was a lot.
Yeah, I mean, usually
50 is a
days
lot.
end up around 10 o'clock typing.
Yeah.
It's just a good process I have.
So for the audience, well, first of all, give everybody your background. How did you get into appraising?
Well, kind of just fell into it through college. My mom was doing it for 20 years, so I kind of was working with her for a while, and then I just seemed to keep going. And when I was doing research in the market, I kind of noticed the average age of appraiser was 56 years old at the time. So seeing that for me, which is a good opportunity.
Average age is 56 at that time.
At that time, so it's actually gone up. I think it's around 58 now.
Okay.
So I'm pretty young for an appraiser. So
Tell everybody how old you are.
I'm 29.
29.
Yeah.
All right, that's pretty good. Yeah, you're a freshie.
Yeah.
Okay.
But you've probably done as many appraisals as that 58-year-old.
Yeah. I mean, I guess some appraisers do about 200 a year. I guess I would say that's pretty common for an appraiser. But
so you do 200 in like 3 months.
Yeah.
Easily.
It's kind of crazy.
So for you, I mean, you are on the road a lot,
Yes.
and you're going to house. And an appraisal is actually pretty in depth. I mean, if anybody's got ever gotten an appraisal report, there's a lot of information on there.
Oh
right?
yeah.
So how do you manage doing that many appraisals and trying to do them accurately? You know what I mean? Like, how do you do all that?
It just everything's the same on every single one. Just do the same processes, talk to the same assessors, go to the same sites. It just once you have a consistent model of doing these reports, it's just repeating it over and over again.
Right.
To maintain that consistency. So
just so the audience knows, a lot of times the appraisers in the transaction of buying a house are kind of they're not really like loved. Would be the point.
It's a great point.
Yeah. Right.
Yeah.
So from your perspective, and this is a crazy market because I feel like home prices are almost outpacing the information to give the appraisers the proper information to appraise them, right? Like a house could be like on the market when you're doing an appraisal for like 4% more than what you're appraising for, but you can't look at that, can you?
Yeah. So when we look at things, we look at exposure time. So we look at it as it's on the market 30 days prior, basically. That's a good generalization. Sometimes look at 10 days prior, but 30 days is a good indicator of like we're in the past where realtors or brokers, you're always looking in the future, like where's this market going?
Right.
We do see some market like appreciations through the like where the listings are going, but typically we are looking in the past for these appraisals.
Right. So in your opinion, how do you solve for that? Because I mean, there is a disconnect. I mean, it is tough to keep up with the market, especially with the inflated prices that are happening right now.
Yeah, I mean, right now we're seeing obviously with the houses when they go on the market, they're sitting for two days at the most. And let's say Royal Oak, you have hours to make an offer and to get accepted.
Correct.
So how do we account for that kind of demand? It's tough. Is that you need to find some kind of sales in the area that have sold within hopefully the past 3 years to be able to pull out that yearly appreciation You can then use those to apply time adjustments on the appraisal report. But what we see is that a lot of appraisers are actually kind of afraid to do time adjustments. Let's just say, I mean, obviously most appraisers are they went through the crash.
Yeah.
And with those appreciation adjustments, they got really hammered.
Right.
They lost work because of it and all. So.
Well, they crashed the whole market. It's all their fault.
Yeah, it's all the appraiser's fault.
How often do you hear that?
Not too often,
No, it's usually our fault. We're the loan officers, right, Sal?
The banks.
We screwed it all up. Yeah.
Yeah, I mean, obviously the appraisers got kind of thrown under the bus after the crash. But obviously, I think there was some pressures they were under.
Yeah.
Well, just so the
Probably
audience
from
from loan officers and real estate agents.
Yeah.
So just so everybody understands, back in the day when I started in the business, I could talk to an appraiser during a transaction. I could say, "Hey, dude, we got I was young, so I used to do this, right? I didn't know any better. I was like, "Hey, man, got to get that $200K appraisal. I need it. We got to get, a lot of it was refinancing, so like, yo, man, I need that equity, right? Like they're pulling cash out, and they're like, all right, man, let me see what I can do. And sure as shit, we got a appraised value back where we needed it, right? Today, so the audience understands, we as loan officers cannot talk to you in a transactional kind of capacity. It's illegal for us to really communicate with you.
Yeah, we obviously we can't talk with you. But on the other side, the realtors, we do try to help. If you give us a call, you want to talk about properties, I always love those calls.
You do?
I do.
Okay.
Sometimes when you go to houses, there's things that you can't see that are hidden. It's hard to really get is your roof 3 years old or is it 15?
Right.
Windows. Determining the age of a window is, you look at them. If you don't see any kind of damage, you're just like, well, it's there. They're average.
Yeah.
So if you can give me those kind of like key points of information on, your HVAC systems, roof, windows, big bones of your house that I can't really just extract from walking through your house, those are really helpful conversations for me.
So for the real estate agents that do watch our show and kind of follow us, I think this is actually very poignant, right? I think a lot of agents shy away from communicating or trying to be upfront, be part of that process. Yeah. But I think the best agents will either meet you at the house and kind of give you what they think of the house. I think that's the proper thing to do.
Yeah.
But you're saying that's a good thing, right?
Yeah. Any data points help.
Yeah.
If the more data I have on your house, the more I can make adjustments for. If I'm just going through the house and I'm looking at the furnace and I see, well, hey, it looks like it's a fairly good condition. I don't know, kitchens.
Yeah.
Aging kitchens, if it's brand new, is it 5 years old, is it 10 years? All those points of depreciation can be, really helpful in the market value.
So yeah, so what do you say to the guy? And Sal, we get this a lot. Hey man, I have the nicest house on the block, and my basement, I put in $100,000 in my basement. I've got this sweet sound system. I've got I put $1 million in my backyard. Dude, your appraisal's way off. I put $300,000 into this house, and you only appraise the house at $300,000.
Yeah, I mean, for things like that, with what we call those are kind of like over improvements. So what does the market expect in your area? So if you're putting in, let's say you have a house that's $300,000 and you put a $125,000 basement in your house. Is that typical for your area? Most likely not. So are buyers, the average buyer in the area, are they willing to pay that kind of top dollar for your basement?
Right.
Typically the answer is going to be no. Yes, you may find a buyer who comes in and says, well, this is the house I want, and I'm going to pay the extra premium for that. But we as appraisers, we don't look at that. We don't look for that one buyer that loves your house. We are looking for the buyer who's the typical buyer in your area.
Right.
So that's how we kind of, everyone says they have the best house in the market.
Yeah, my house is the best.
Yeah, dude. So it's, I always take that into account, and I try to extract as much information from those comments out as possible.
Right.
But obviously people put their bias on it, and I have to be a pretty unbiased party going into this property.
Well, and that's where those appraisal guarantees come in, right?
Mm-hmm.
So,
yeah.
And that's, to me, the only thing, I don't think there's a solve for appraising necessarily to bridge that gap you were talking about earlier, where people are looking in the past and realtors are looking in the future. It's all dictated by market demand and people who are actually willing to pay above and beyond appraised value to create that new sold comp at the future value.
Well, that's what's creating the increase in pricing. A lot of these appraisal guarantees, cash offers, where the appraisal is kind of removed from the equation. Then they're going to spend
from the sales price.
From the sales price, right?
Go
ahead.
Do you look for those things in the contract before you go out to the house? Do you look and see, is there an appraisal guarantee? How much research do I really need to do? or does that not affect? Honestly, I'm generally curious.
So we do analyze contracts, but I always I almost sometimes wish I look at them at the very end of the appraisal process. That way it's kind of unbiased, because I would say whenever someone says a number, let's say 150,000, in your head you have 150,000, immediately. So you have some kind of indicator of value, which, obviously we're not supposed to base our appraisals, and we don't.
But human nature,
there's always.
Well, like part of me does not want to submit like concession addendums and things until after you appraise it. Because then it's like, all right, can you add the concessions to the appraisal as well?
Well, actually, like concessions, they're not the worst thing to have on the appraisal, because if it's not affecting your market or your contract price, like if people are like, well, hey, here's the asking price 150, we took their offer and we're just giving them concessions because of repairs or something like that. Maybe it's not affecting your market price,
right?
So it's not the end of the world to submit them right away.
And just so the audience understands this, and on a purchase transaction, you do have access to the purchase price and the purchase contract.
Correct.
So a lot of times on refinance transactions, it's zero. You're going blind, like you don't know what you're getting. Yep. So, but on a purchase contract, the appraiser, you in this case, the number that you're trying to get. And I have to believe
we're not trying.
Poor phrasing,
right? No. I know. But I'm talking reality. I don't give a shit. So the reality is, like, what these people are trying to get, and I gotta believe that you don't want to give a low appraisal, but sometimes you have to.
So the low appraisal, that's obviously the big term in the industry. I tend to not like that term.
His is an accurate appraisal.
Appraisal.
So it's in my opinion of market value. I guess that's so it being low. I mean, I guess sometimes when I go out and do an appraisal, obviously bringing it into what you call a low appraisal, it causes way more work for me.
Yeah,
and stress. I mean, I get stressed. Don't worry. Like when I'm hitting that submit button and it's low, I can feel my stress level. I'm like,
because you're getting a call.
Yeah, I'm getting a call. Sometimes you get angry calls. You're gonna get the rebuttal.
Yep.
Which, mind you, sucks to put together.
Yeah,
that's the worst.
Yeah,
for our end. Yeah.
Rebuttals. I wish there was a better way to do it.
Sometimes they work. But
sometimes they definitely do work. I think there should be better processes for rebuttals. A lot of times, what I do see in rebuttals is that I'm just sent a list of 3 to 4 comps.
Right.
Which no explanation.
Exactly. And that's what it is. I have no explanation. Okay, so tell me why.
Tell the story, dude.
Yeah, tell me this. Give me the story. Give me a story that I can tell, on the report, that these comparables that you're sending me, why are they better than the ones I provided?
Right.
Obviously, I think I would say 90% of the time I get comps that are just higher price, just simply because of their higher price.
Right.
Yeah.
Well, and as loan officers, I mean, we have access to a lot of data, but like the real estate agent has all the data in the MLS, which has, the sold.
The listing agent should know what that house is worth pretty well.
When an appraisal comes in lower than what they wanted.
That's a good way to put it.
There you go. I always say, hey, no big deal. I'll fight this tooth and nail if you give me comps, right? And a lot of times they will supply me comps, and let's say they give me 3, maybe one of them is valid, and it's like, okay, this makes sense, right? Like maybe we can squeeze another 5-10K out of it, but like these other 2 are 15 years newer, 500 square foot larger.
They're in a different school district.
And
they're 2 miles away.
Right.
And we submit it to the appraisal management company, which is like the middleman between, the loan companies.
That's who speaks to you on our behalf.
They have a chief appraiser who's like, yeah, I mean, I'll send them if you want, but like those 2 are trash.
I like the word comps.
Comps. Okay. Yeah. All right. Let's talk about comps. Let the audience know what a comp is.
So a comp is a listing that you compare to your subject property.
That's similar in size and scope.
Yeah, exactly.
Right.
So I think a lot of misconception is that people just assume that if a house is nearby, it's a comp.
Right.
Which is not true.
It's right next door, dude.
Yeah, exactly. So, really what we like to do is as an appraiser is that when I was training, it was called, my manager called it Sesame Street. Is that it's one thing like the other.
Yeah.
So if
That's
exactly,
good. Yeah, right. Okay.
exactly.
All right.
So is the comp you're supplying like our subject property? So a lot of times I see people, they send over, let's say I have a ranch, well, that's built in
send a
1970.
colonial.
I'll get a colonial built in 1990.
But it's on my street.
Exactly. So is that really comparable? Are those two similar
No.
houses? No. So that's exactly. So that's what we're looking at.
Like Sal and I would be comps. You and I would not be comps.
Yeah, exactly.
I think where that becomes
like the same person.
where that would become difficult would be like, let's say, a neighborhood with not a lot of recent sales, right?
Yes.
And then you have a ranch and then a colonial on the same street in, let's say, Huntington Woods, but you're comparing ranches in Oak Park, right? Which I'm sure you would pull from like Berkeley or Royal Oak.
Yeah,
but
yeah,
it's like it can be tough.
In areas like that, if it's like Huntington Woods, obviously we try to stay within the same school districts and then the same if you can stay within the same subdivision,
Right.
when there's not a neighborhood conformity like that. So like obviously when we're appraising in Warren, St. Clair Shores, typically within that quarter mile or half a mile,
Yeah.
everything's the same. But like I do a lot of appraisals out in St. Clair County. It's like
There's like one house for
there's
every
one
3 miles,
house
right?
and it's 5 miles away.
Yeah,
So
yeah. It's a different market.
So it's really strange to pull those comparables from those areas. You just try if you have to go to different like level houses, you try to do similar construction styles, similar aesthetics on the outside. All those things like you take into account.
So you said something interesting to me. You said a comp is a listing. So when we're getting rebuttals, I'm usually very picky and say I need closed sales.
Well, yeah, I guess a closed listing. Sorry.
Okay, because you don't know how many times I'll get comps back to support their value, but they're all listings. Like,
Yeah.
Nobody's bought that house yet, so it's not
Has it
proven its
closed?
worth.
And it could close at
It
that
could
price,
close,
depending, but it's a different transaction.
It's
when
actually
we-
listings are actually kind of a good indicators of where the market's going. So
But you don't look at
Yeah,
that
we
necessarily.
well, on
Will
the
you
report-
consider to make those appreciation adjustments though if all the listings are at that same value?
So let's say you send me a couple listings and you you call the realtor up like, hey, I see you have a listing, like can you give us the contract price? Sometimes they'll be willing to give you that information
help you out, yeah.
So like let's say it's like $230 and like, well no, actually we got a signed contract conventional for $235 and it appraised and it's closing blah blah blah.
Right.
In a week. So what we can kind of do on the appraisal is like if we're near the top end of our sold comparables is that we can use support from those active listings. Like, hey, this is what's currently sold, but the market's going this direction based on this information.
Yeah.
So it can provide support for market value.
I've had one where recently it looked like in the comments, in the rebuttal that I had submitted, they evaluated that comp and said that since it was multiple offer situation and the actual sales contract price was that, they did give a positive adjustment to our
Exactly. Yep.
less than expected appraisal.
Yeah.
So let me pose a question for you. So in any industry, there's good and bad, right?
Yeah.
There's some good loan officers and there's some bad loan officers. Good real estate agents, bad real estate agents. In your opinion, are the majority of appraisers in this market like good? Or because I know you're good at it. I know you take the time. I mean, just from this conversation we're having. But there might be some appraisers out there that want to do 30, 40, 50 appraisals in a month, and they're just banging through them, and they don't
Yeah.
care. They're not really thinking of the repercussions of it.
I think that's in every industry. You're
Right.
gonna have I think the majority of appraisers, I would hope over 95% of them are,
Trying to do the right thing.
Yeah, I don't think anyone goes out there trying to do a bad job.
Right.
Everyone's trying their hardest. They're not gonna
Yeah.
just try to, because everyone realizes the ramifications of a low appraisal or what you consider a bad appraisal. But I've done some appraisal reviews in the past where you see appraisals and you just like, you're blatantly ignoring data points.
Yeah.
And I think that can cause issues because that one appraisal and the sale goes through, and so now you have a comp. Well, that comp might have been artificially inflating the price in the area, and that just, if that starts to steamroll higher and higher, we get these runaway markets.
Right, which I've said in the past, like the appraisals and appraisers in our process are necessary. Otherwise, you will have rampant inflation to where like houses are selling for way over market and people are overpaying, and then all of a sudden we're in a really bad spot where people, the market's really overinflated. We are like appraisers are necessary in our process.
Yes.
Let me ask you one more question, and I kind of want to move on to some topics, but. So there's and I got this question the other day, and I have to pose it to you.
Okay.
So I had another loan officer friend of mine in the industry, and he goes, "Hey man, why like are Quicken Loans appraisals always lower than everybody else's? This is what his perception is, right? And I've heard this multiple times in our industry. There's this perception that the company like has this different like pressure or some type of like conversation with the appraiser to say we need really tight appraisals, right? Is that something that happens, like, or are you totally like devoid of that?
You should be totally devoid of that. I mean,
have you heard this? What I'm saying?
Actually, I have not. So
Okay.
I'm kind of unfamiliar. Like, I
I
always
think there's a misconception among people that
Just industry professionals
that
too.
If you are right, well, specifically, you know,
In the industry.
agents.
Yeah.
I mean, as a loan officer, I think that you should understand that that appraiser that you picked also does appraisals for other companies. You know, if you did appraisals for one company,
Right.
How does that work? So I've heard a lot of times, like with banks or credit unions, they have their own like in-house. They don't use an appraisal management company, so they have their own team of appraisers. I feel like there's more influence there.
actually, so I'm on a couple direct lender list. You still kind of have I think I'm not sure the exact setup, but I believe they have their own HVCC departments.
Yes.
So that's kind of separate from the loan officer.
What's the
so
HVCC so the audience understands?
it was just I think it's from a ruling from New York in
Yeah.
2008
Yep.
that would separate out the direct appraiser list on lenders.
Right.
So these lenders have their own kind of departments to have a third party.
Yeah.
For their
To
loan
basically
officers,
check
yeah,
everything, right.
exactly.
So again, so the audience understands. I keep saying this because it is a kind of like a complicated thing. An appraiser isn't married to like one company. Like,
No.
Like, right? Like you're not like hired by Quicken to do appraisals for Quicken. You're not hired by United Wholesale to do appraisal. You're not hired by Omega Lending to do
Exactly.
right? You're independent and you pick up business from all these different people.
Yeah, I mean, I do. I know there are some appraisers who just do work directly for Quicken Loans. Well, they don't work. They don't work for Quicken.
They'll just
Quicken
take their
Loans.
deal.
They just work for an AMC that's kind of associated with Quicken Loans.
Right.
Right.
So that's just kind of they have direct panels, and so the whole things are coming in low. That's maybe the deals that maybe that's the right value. How do we
well,
know
I think
that?
they just do so much business, right? That a lot of appraisals come in lower than expected, and that's just the connotation they get. Like they might do 5 deals with Quicken Loans as opposed to the one deal with Omega Lending, right? And if the one deal with Omega Lending comes in, and it's like, I don't know.
Yeah,
Well,
but
you
let me
always
play the-
remember the negatives.
Let me play
Yeah.
devil's advocate on that because I have gotten deals from Quicken potentially that they had low appraisals, and they're like, "Listen, we had a low appraisal." I go, "Listen, you had a low appraisal. I'll be very happy to do one through our company,
Yep.
and see what happens. But know that like the chances are, there's probably a good appraisal, and sure as shit, we get the appraisal back and we get the value we needed, and so like as a real estate agent." They're like, well, screw them. They got it right, but it's just a difference of opinion from two different people.
Yeah, I
That's
think
that's the key
Well,
thing.
I mean,
is
I've
that
had them come in low, and then I hear, 30 days later, I went with, this other lender that the agent recommended, and it came in $75,000 higher. I'm like, okay,
it's not the lender's
good luck
opinion.
selling that house.
So that's in the market. I think that's the frustration that people have a lot of times.
Yeah.
Because what'll happen is they might get a low appraisal, especially if you're in an industry, you're a real estate agent, you get a low appraisal, and then you move the file or you get another appraisal done. And we as a broker, we can move and we can get multiple appraisals done if we absolutely have to. I hate doing it, but it happens. Like if people are really adamant. And then you get the value that you're looking for, and then it's like, well, what the shit, man?
Yeah.
Like it should be like as standard as possible, but the absolute reality is it's an opinion of value, and you try to use data points, and people might use different data points, and you're right? Like, so like in the market, how do you mitigate that difference of opinion when like it's so vast across the board?
I mean, maybe we might need an industry shift on when we do the appraisal. It seems pretty crazy to me that people are going out on the market spending hundreds of thousands of dollars, and then we give them the value after. It's like, okay, you guess what it's worth, and then we'll tell you what it's worth. Usually, let's say you go anywhere, you're looking to buy a car or do any research on any kind of product, you're looking to figure out what it's worth before you actually go out and make that purchase. So with the home appraisal
That's
process,
interesting.
maybe there should be some kind of
So before the house hits the market, you
Or-
got to get an appraisal.
or before you
one
can
or
take
two.
an offer.
Yeah, let's say there's some kind of clearinghouse or something that you put your house in, and then you get 2 appraisals done, and they kind of you look at it, and maybe there's a range, and if you get a purchase price within that range,
then it works.
So
as long as all lenders tapped into that clearing.
My mind just kind of got blown.
Yeah, I mean, because like
that's an appraiser.
That makes so
saying,
much sense.
It does make a lot of sense, actually.
it just sees why at the end we're the, we have buyers agents, listing agents, loan officers, title companies,
people moving trucks on ready,
and
like,
then 2 weeks before close, and guess what? We're $20,000 lower than your purchase agreement. Good luck.
I think that's the biggest.
Is a really bad process when you put it like that, right?
Yeah.
I think that's the biggest stress point generally in the transaction.
Oh yeah,
for both sides, for all parties involved, really.
Sometimes it's an unknown factor. It's
the biggest unknown.
I'm this phantom figure coming out to the property, I guess is a good way to say it.
Yeah, nobody really sees you.
Yeah,
Right?
You're either an angel or a grim reaper, bro.
Yeah,
I mean,
some people love me sometimes. Some people really don't.
And it has nothing to do with who you are.
Yeah, so it's.
I see it becoming automated like a variance, right?
Well, I wanted to bring that up.
That's definitely coming,
and
I wanted to bring that up.
Yeah.
It would be hard though, I think, to coordinate the real estate side of things along with their lender, because what if, I guess, how do you argue that, right? You have basically anyone who wants to buy this house that comes in, $10K high, that's got to be cash above and beyond. The lenders won't lend it.
Right.
Which I guess would be
that would be good because, the market's sped up. So you go, well, this is what we know a mortgage company. Let's say all the lenders came together and said, okay, from these 2 appraisals, we'll lend within that range.
Mm-hmm.
And then if you wanted to bring cash up where you're going to push the market up because there's more demand.
Or I suppose they could rebuttal it before that actually hits the market, right?
Yeah, I mean, I guess if you had 2 appraisals.
But to his point, to Kevin's point, it makes a lot of sense to say, hey, let's get the appraisal done up front so we know what we're doing, so we're not setting people up for failure.
Exactly.
I mean, there's a lot of stuff in our system that's broken, but that's a pretty big thing.
So I see a lot of complications with how the system is set up where,
our system's stupid.
But I'm saying, the
whole thing.
So we can't take an appraisal that Quicken Loans had ordered for them, right? Quicken's the client.
They own that appraisal.
We can't use it. So that'd be a major industry shift, not only to make it happen up front, but have it be a blank client that is universal, anyone can take. That'd be how would someone start that to push that and make that change? I mean, I don't even know where.
I mean, I guess
where would I go?
So the appraiser's job, going out to the property, we're collecting data points, but I don't think that's my main skill. My main skill is analyzing data.
Right.
So me being in the office is way more valuable to the industry as a whole than me going out to a house to inspect them. So I think what we'll see the next 5 to 10 years is that we'll start seeing companies pop up that will service data collection at the home. So they'll send out an inspector that will be, collecting data points, and then that report will be sent to an appraiser, which right now we are actually, Fannie, I think there's
that's what I wanted to talk about.
Is that there's guidance out there that says, they allow third-party inspectors that if the appraiser deems the data reliable, they can use in lieu of an interior inspection. So, but it's going to be definitely a monumental shift to get all those data points that are accurate and that an appraiser deems reliable. I mean, you're going to have to talk about interior condition, all those potential issues, foundations, roof, and then the biggest thing, the lot. Your lot is where you are, location, noise levels, street conditions. There's so many different factors that go into it that will have to be disseminated to that appraiser, but it definitely is possible.
Yeah, just like everything else in our industry, everybody wants to remove the human element a lot of times right now.
Never happen.
You can't.
Right. Well, hold on. So there are things it does, right? Hold up. Let me finish.
Yeah.
So appraisal waivers on deals, right? So just so the audience knows, sometimes when you run a deal through Fannie Mae or Freddie Mac, they'll come back and say, we don't need an appraisal on this house because they feel comfortable with that value.
Yep. That's almost a disservice if it's a purchase to the buyer, though, because now they're paying.
But everybody's happy about it.
Oh, absolutely.
Oh, everybody's like, I don't have to do an appraisal,
but
right?
still, you don't know what you're buying, what it's worth.
They don't care.
I get it, but it's a disservice because you could be overpaying.
Well, yeah, when times are good,
yeah,
it's all fine. But then the second something, let's say eventually the recession, we'll come back and oh, you screwed me, you gave me the high appraisal, and
right,
what happens.
Yeah. So we are seeing potentially more automation in the appraisal process. Fannie Mae is really working hard to get rid of the appraisal process. It seems like they just seem to be just trying to try to cut it out as much as possible because I don't know why, but like it would be weird if I was Fannie Mae, why I wouldn't want my money protected with an appraisal, but they're just basically saying we don't need them.
I guess what I've heard from other appraisers I've spoken to is that Fannie's strictly said that they're not trying to cut out appraisers.
But they are.
And I know,
right?
Exactly.
They really are.
But they are.
Yeah. So it's definitely going to be a shift over the next, like I said, I think 5 to 10 years of what's going to happen. But I don't think we should ever eliminate the in-home and data point collection. I mean, maybe it could be automated by a computer, because I'm sure if someone writes a program, you can compare way more data points and extract way more value from that.
Right.
But then it's not. I mean, right on the appraisal report, it says this is an opinion of value.
Yep.
It's not really an opinion anymore. It's 'cause it's not a human behind it.
Well, I think
a
that
machine
they should
can't have
more
an
or less
opinion.
Yeah, they can.
standardize the value.
Yeah, AI's getting.
I think that
Good.
I see it going towards, because I mean, you have to think doing this 30 years ago versus now, the amount of data collected, just specifically in the past few years, even with collateral underwriter, right?
Yeah.
I feel like most homes are probably sold and bought within, 5-6 years. I think it's like a 7-year average.
Yeah.
So we have all this data of homes, what they sold for 7 years ago, what they're selling for now, 2, 3, 10 years, whatever, right? And I think that they're going to come up with more of a standard, like a standard value with variances based upon those interior inspections, like the finishings, things of that sort, which may or may not give you like a on the lot, like on the dot number for a purchase price or an appraised value, but maybe like a range where, hey, if the sales price falls within this here, you're good. And
That's
it's just
another
going
good point.
and it might not even tell you what it is. It might be like DU, where
Like
it
thumbs
says
up,
like
thumbs down.
thumbs up, thumbs down.
That's another thing. Like the appraisal
Pass or
report,
fail. And if it fails, you can rebuttal it.
Yeah. I mean, the thing is with appraisal, we have to give a single point of value on every single one. So is that really is any appraiser out there that good?
No.
To pin down a
Except for
single,
you.
like within.
You
I
are,
mean,
yeah.
I am.
Yeah,
but,
you are. Yeah, you are. Yeah.
So that's why, like on most appraisals, what I try to do is I try to give, based on my adjustments, the range of value in the report. And so typically, unless there's a clear cut, 3 of them are the exact same adjusted value. If you fall within that range, typically that market value is supported on the appraisal report. So that's for me it's a good safety net because
Okay.
So moving to automation though, how would they solve for, like you said, when you get that call from the agent with all these data points or things that you wouldn't have been able to find out, even you walking through the house, a computer's not going to be able to get those data points. A computer's not going to know that, right?
But if they create a standardized report that has those data points lined out, age of roof, age of where it's mandatory to collect those points,
And it's housed in a data warehouse. Yes, that would work.
that standardized.
Let's say you go through a house, you build a report, go through every room, build you type in what kind of flooring,
Right.
what's the condition, is it the walls condition, everything like that. So if you can supply that to, let's say, a database, and one day
Someday they can automate it.
they'll have enough
Right.
points to do.
All right, so we got to move on because we're running out of time.
Okay.
I know we could talk about appraisals all day, but we really got to talk about some other stuff.
Oh, good.
You good?
You want to move to tariffs?
Not
Tariffs.
yet. I'm not going tariffs yet. So more Americans are quitting their jobs. This was like a headline on CNBC.
Really?
And it's a good thing, is what they said, which is really interesting to me because people are feeling confident enough in the market and the economy that they feel like they can either leave their job and get another one, right? So like when you feel the economy's stress and you might not be able to find another job, people don't move, right? They're like, I got to stay in this really toxic environment just so I can make a paycheck, right?
Right. I mean, quitting your job does not necessarily equate to unemployment.
No,
Right.
You're quitting to upgrade. You're quitting to go do a better environment. You're quitting to start your own business, right? So there's a lot of that happening right now, which I think is a great indicator for our market. When I read the headline at first, I was like, that's bad. You know what I mean? Like, that can't be good. Everybody's quitting their jobs. But they could be quitting their job and moving to the Bahamas. Who knows?
That sounds nice.
Right? It's interesting to me that, like, people feel that good about the economy right now.
Well, I'm doing a lot of pre-approvals right now for people who last year didn't qualify or even earlier this year. And it's like, man, they had 3 or 4 different jobs and they were making the same money even, but then they quit all those jobs and now they have one where it's like, all right, now I'm making the same or more money as I was before, and
Awesome.
Here's your pre-approval letter.
It's always good news.
So that's what I think is our in our market right now. We always talk about a lot of factors that could affect it. You know, the market's really hot right now. People are like, is it overheating?
Yeah.
Right? And the reality is, as long as that job market stays stable, I believe that we're not going to change in our demand for housing, and we're going to stay on this course. I think that's the only thing right now, in my opinion, that could really affect the housing market, where if jobs are strong, we're okay, right? People are making money. People are able to like move up, quit their jobs, get more raises, whatever it may be. You know, as rates go up, people are like, oh, rates are going up, and that's going to really affect the people's buying power. That's not necessarily true because people are getting better jobs. They're making an extra $100, $200 a month. So if their payment's an extra $100, $200 more a month, it doesn't affect them the same way, right?
Yeah. I mean, the only thing I could see affecting housing pricing right now is if that we have a increase of listings. Which right now, we know there's very low supply.
So let's talk about that. What's going to cost? How are we going to get an increase of listings? And even if we do, will it still satisfy the demand?
I don't know. That's a good question. You know, the building startups right now, they're more geared towards the high end, and the demand seems towards
new construction houses $400K minimum, right?
Well, and I think people who are in, you know, their homes and have been for a while have been afraid to make that jump. So I think that, you know, an influx of income for them, whether it's a new job or a raise at work, or they're making more money, might say, well, I was at 3.875 and now I'm ready to pay 5. I don't care. I want to move.
This could also
I'm making the money to do it.
It's all about jobs, dude. That's how I feel about it.
But then for let's say people who bought pre-2008, this could still be the hangover from that.
Right.
You know, are you just saw you're kind of finally just getting
jaded,
equal or above water, and you're like, well, if I move now,
am I going to screw myself?
Exactly.
Again?
Am I setting myself back another?
It's like after having a bad relationship, you're like, I don't know if I'm jumping in that boat again, right?
So it's like you just want to be the single house out in the market, you know?
Right.
You're
right.
hot and
What?
Yeah.
I don't know. I feel like some people have the mentality of trying to plan through that, and you know, I feel like that's very hard to time and judge, right? Unless you know shit has hit the fan and everything's at the bottom, like, what are you gonna do? You know, you don't really know if the ground you're walking on is solid or not. So just do what you have to do, because if you sink, you're sinking with everyone.
Exactly. If you want to move,
you know,
because it's a home, and that's always
right. Another thing that's happening right now, you sent me this article the other day.
Yeah.
It's, dude, Americans right now are sitting on trillions of dollars of equity, right?
Yeah.
All these homes, like if you bought a house, even like, I'll give you an example. Like, this is crazy to me, but I was talking about this yesterday.
Yeah.
I bought my house for $390. It appraised for $380 when I bought it. I paid $10K. I had an appraisal guarantee. I really felt like I overbought for the area, but I wanted the house, right? There's a house with my exact layout. The only difference is it does have a walkout basement, which we talked about. It's sold for $465 a year later.
15%.
That's a lot. That's a big increase. So imagine if people in that neighborhood bought 3 years ago. What?
You need to refi.
Shut up.
No guy.
Like, let's say they bought 3 years ago and they bought for $300. Let's say hypothetically, and they could sell that house for $460. That's $165,000 of equity. A, how do they tap into that without moving?
Yeah.
Right. And B, it makes it really hard not to want to move and get that money out and do something with it. Right.
Yeah. I mean,
so. Like, what's going to happen with all this equity that's just sitting in these people's homes right now? You know, people don't want to refinance because they have a 3.875 interest rate. They're going to go to 5, right? So how do people touch that equity?
I think people are going to get over the interest rate very soon, because there's going to be HELOCs are going to be coming back. Americans have...
What are HELOCs, by the way?
They're home equity lines of credit. So it's a second mortgage or second lien on your house. It's like a credit card, a line of credit.
It's connected to your home, right?
It's connected to your house. So you're using your house as a credit card, basically.
Right.
But I think you're going to see those. Americans have an enormous amount of credit card debt. It's astronomical. So I think you're going to see...
We do have a lot of credit card debt.
You're going to see a lot of people tapping into that equity. Maybe if it's not a HELOC, they're going to tap in to either do a first lien refi or to take out a second fixed. I think you're going to see fixed seconds come back, cash out refis to pay off some debt.
Yeah, the
people are
market
going to start tapping in to get out of debt.
I mean, there will be vehicles. I guarantee you. Here's what's going to happen: lenders and people that like create like the loan programs are going to come out with stuff to be able to tap into that equity, because there's a lot of money in there that people want to get out.
Yeah.
Right. And you can't get it out unless you refinance or sell. And potentially there might be different avenues that are going to be coming out to be able to touch that money because it's going to be lucrative for everybody involved.
Once the conversation starts with how high credit card interest rates are and why are you sitting on all this, why are you bitching about a 5% interest rate when you have 10 credit cards
And 22.
That's an easy conversation.
$80,000 that you're paying 29% interest on?
The difficult thing with a current first lien mortgage, right, is that you have to have 20% down.
Right.
Or 20% equity is the
Max
you can go
out.
up, right?
Yeah.
So with that being said,
That'll change.
most
Watch.
people with a ton of credit card debt probably didn't put 20% down either. So
If I had to bet, right now, I would bet a lot of money that lenders are going to come out with cash out products to go up to 90%, 95%, because the refi market's drying up.
Yep.
The only reason people are refinancing right now is if they get divorced or they want to pull cash out. And if they can't pull cash out past 80% of the value, then what's the point of doing it?
Yeah.
So I promise you there will be products that are going to be coming out that will allow you to ransack your equity, which scares me a little bit. But
2005,
it's gonna happen.
That I'm okay with that as long as there's an appraisal. I don't want to see.
I'm not okay
very
with it,
much.
man.
I'm okay with that as opposed to stated income, stated assets, just giving money away. If people want to use their equity and they're going to pay for it with an interest rate, there's a risk there that the lender
One of the
takes.
problems
It
we
makes
had in the
sense.
past was people were using their equity in their house as like a safety net so they could rack up more debt. And then what happened?
But that was-
you know how many times I did this in my career? I paid off people's debt. I really saved their lives. I saved them $400, $500, $600, $700 a month.
Yeah.
And then all of a sudden they call me a year later. And they're like, dude. I put a pool in, and
Use your money wisely.
I need some more money, buddy. And I'm like, well, you've got the equity. Do you really want to do? Yeah. I really need to lower my payments, man.
Yeah.
well, as long as they sold before the crash, they walked away scot-free.
Right.
But most didn't. So real quick,
But a lot of that came with
We're running out of
coupled with inflated values too. So
true. Right. There's a lot
There's
of
more
factors.
protection
There's
in
a lot of
place,
that. So tariffs. There's a list of another $200 million worth of tariffs. $200 billion worth of tariffs that we're putting on China. China was like, "Go F yourself. We're going to do this." So it's like this. None of this is actually enacted yet. So we haven't really felt it because it's got to go through a process.
Well, it's all threats until they decide on it, right?
They
So why
did,
would
but it's
they-
got to go through a process. So they're starting the process of putting these tariffs on. People that are exporters are not comfortable with this. People that are importing are like, my goods just went up. This could potentially like a trade war with the biggest or second biggest economy in the. I mean, this is two behemoths kind of going like, screw you, no, screw you, no, screw you, screw you,
Yeah.
and then it's like a little pushing, and then like it could become a
Boxing
big
match.
problem, right?
Do you think, though, that if importing a good that was so cheap to import because of its quality and whatnot,
And they've got 14-year-old kids making
right,
it. Right.
do you think that if the cost of it becomes equal to or less than building it here, that's
Right,
a
so
bad thing,
that's the
right?
right.
Do
So,
you think
like-
that's like the end goal or mindset?
well, that's the problem though. A lot of things, in order to build it here, we still have to import that stuff,
Guys,
which raises the
What
price
you
of
don't
manufacturing.
understand, what people don't understand about this, we can screw with China and we're not happy about their products. Here's what, if I'm an importer and that product from China is now 10% more expensive, but I can go to Venezuela and get the same product at the 10% discount, all I'm doing is switching my shop. Instead of shopping at China, I'm going to shop in Venezuela.
Exactly.
Right?
Yeah.
So that's the problem. Like you can create this trade war, but if I'm an importer, I'm just going to change what store I shop at.
Yeah.
Right? Instead of going to Sam's Club, I'm going to go to Costco.
Yep.
I both.
Oh.
I like Sam's better. It's less congested.
Really, I love Costco.
Yeah. The Costco's, dude, you go in there and it's like a million people in there. So anyways, my point
Good stuff, though.
with all this is, they're just like arguing, and the reality is the real people that like are going to be like affected are just going to shop somewhere else.
Yeah, they're not going to deal with it. They're not. We're
Right,
not
and
going to buy from the United States anymore. We're
and
going to buy
then-
from Russia.
Right.
We're going to buy from
Someone will match.
Uzbekistan.
Someone else will match it and say, "Well, we'll do it."
Yeah. There's
Right?
always someone willing
You know,
to do it
right?
cheaper,
Wouldn't-
right?
Wouldn't you agree with that?
Well, it
It's
just
already happened.
depends, though, if our country will allow imported goods from that country, because they can also regulate that.
It's not. It's not about us though. It's about if they're buying from us, and we're trying to tax them on it. They're going to say, "All right, well, we're just not going to buy from you anymore. We're going to buy from somewhere else." So it's not just our consumers that are going to get affected. It's our workers.
Yeah, so it's gonna be interesting to see what happens with all of this. Yeah, but I personally think our economy is strong enough where we can afford higher prices on like those little rubber band bracelets and like dog leashes. Like that was on the list. Like a dog leash, they're gonna tear off a dog leash because they're so cheap.
Just think how much cheap shit you buy that just goes in the trash, right? Like,
stop buying it.
I hope that somehow this affects bad iPhone cords that break after like 3 or 4 times
So many
you
of
use
them,
it.
dude.
So many.
Ever walk into a gas station and they've got all these like trinkets and you know they're all from like
You just want to smash them all.
Yeah,
cigarette
like-
lighter
He's so
USB
angry,
plug.
yeah, like there's all
Along
these
with
trinkets.
the-
I
You're
always
like, dude, I'm
wonder
gonna
who
charge-
buys that. Who's walking
Hey,
in those stores?
I've bought a couple in the past just because I'm in a
Dude,
pinch. I don't have one. You got to
Yes.
use it, right?
Yeah.
Well, then
It's
You throw
hard
it
not to like. Why? It's disposable. It's 3 cents to buy whatever it is. And
Fun
it's
little
right.
gadgets. And
Well, and that's kind of where most goods have gone is disposable.
Yeah.
Shit, my blender doesn't work.
Oh,
I'll
go
go
get
to the
another
trash and go to Costco.
Yeah,
You
nobody
know,
creates
they're
quality
they're
products
$30
anymore,
bucks.
well, yeah, it costs more to repair than it is just to buy a brand new one.
100%.
Everything.
Your TV
So,
breaks.
new
You're
one.
not fixing your TV,
No,
bro. You're going out because it costs you $400 to get it
Because
fixed.
the parts
stick
aren't
that
held
fruit-
here because they're not made here.
Right.
Right?
Stick
There
that
is no
free sign
repair
out there.
shops
Right.
because
I do like the idea, and obviously this is like a fan like of America buying American and like creating like a
solid goods.
Right.
I mean, like a 50s utopia of manufacturing
Correct.
here, right? But
It's just not.
we'll
gonna
just have to
happen.
see. I mean, we've already gone.
We're globalized.
Yeah,
economy.
it's
Yeah,
not. It's
yeah,
not.
it's-
It's
we're
not gonna
beyond
happen.
that. Way
So
past that.
last thing I have for you guys, there was a report out that ranked the worst and best roads in the country, and guess
Yes. Who's
who
number
has
one?
the worst?
Michigan.
Michigan, Detroit. Actually, the Metro Detroit area. We
Good
have
for us. We won.
absolutely
bad,
the
yeah.
worst roads in the country. So for those of you outside of Detroit, feel very good about your roads, even as bad as you think they are. Our roads are the shittiest.
Yes.
They're so bad.
And I don't get it.
Undeniable now.
What I don't
too.
understand. Here's what I don't understand. You're always doing construction.
Always.
You're always doing construction. Fix the roads. Fix the roads and just fix it.
Pot for potholes.
It's so weird, dude. It's
Comes
so
in.
weird. Like they say, oh, it's the ice. Well, guess what? I went up to the UP that has a lot of ice. The roads were really nice.
Because they don't salt them.
You're right. They put like that dust stuff on it.
Sand.
Yeah. That does.
What I will say about Metro Detroit, though, is that in a snowstorm, I mean, no one is like, I mean, yeah, people drive slow and whatnot, but like, shit keeps moving.
Yeah.
Like, people are going to work after 10 inches of snow or a foot of snow.
Yeah,
because
dude. Yeah, you go to
those road crews
California.
are out
Maybe you
there
shouldn't,
just
though.
working.
You go to California and it rains and there's traffic jams.
It's moving until the one guy's moving
know what's
too
always
fast
funny to me?
and stops everyone.
It's so funny to me when people are like, "Oh, it snowed 2 inches in Georgia and there was 14 crashes." Yeah. It's like it's 2 inches, dude. We just got hit with 12.
We're going 85.
And the cars there are the same.
Yeah,
You know?
Yeah. Jessica, what do you think? How do you think our roads are?
They're the worst.
They're horrible.
worst.
Yeah, and I guess I didn't realize how bad. I would look at this report.
so bad.
I'm like, who's the
Listen,
worst?
if you are leasing or buying a new car, get those, get the wheel and tire package.
Yes.
It's heaven.
Yes.
Everyone thinks that's a sucker. Not in Michigan.
Oh, I got
Get
one.
it.
Save
All
me.
right. Well,
Yeah, I've replaced many a tire.
That's what we got, guys. So how do we find our? We're like on the Podcast Detroit app and podcast. You can get us on iTunes, SoundCloud,
Stitcher,
Stitcher.
Podbean,
Podbean,
Google Play.
all
subscribe,
Google Play,
like,
all the places.
love us.
Facebook Live.
Facebook Live. We're on it right now. I think there's like one person watching.
Yeah,
For
that's
all
right.
our 14 audience members out there, we really appreciate your support.
Share
Please share us. We'd like to get to 30.
Let's double it.
Surprisingly, a lot of people listen to us. It's kind
We
of,
do.
Yeah, it's really.
It's
weird.
kind of a weird thing to watch.
Oh, nobody should be watching us. Actually,
Which is why I don't really care if I wear this.
you look odd
Yeah,
always.
I mean, I don't care. Nobody watches.
So, Kevin, thank you so much for being on
Thanks
the
for
show.
having me.
Usually, I'd give people out your information, but I mean,
Yeah,
do you
you
really
know.
want people calling you?
No, I don't.
No. So, great friend of the firm, Salvatore. I love you immensely. Bradley, I love you.
I love you.
Not as much as Sal. Thank you, everyone.
man.
Jessica, thank you so much. We are out. Have a good day.